Hello, everyone. And did you see US consumer confidence? This is the chart, the data stream that tells you what's really going on in the US economy. And it's not great. It's not fantastic. In fact, it's at GFC levels, 1992, 89 recession levels, 82 recession levels. It's below COVID. In fact, it spent the last year being massively below COVID lockdown levels. So consumers were more depressed than during COVID lockdown periods. And it's kind of crawled up in a bouncy way over the last year. But now, for the last 3 months, it's just dropping away again. And this is what I keep telling people. The US economy is in really bad shape. I don't see anything turning it around because you have an administration that keeps telling its population, all Americans, that everything's fine. We have the strongest economy in the world. And that's not even close to true. But it means that they're not adopting any policies to support the economy, which means it just gets worse because it's a runaway train wreck at the moment. The Federal Reserve would like to do something to support the economy and jobs, particularly in an election year, but they can't because inflation's still high. However, on Friday, we did also see import and export prices, or last week, decline, and that's encouraging as inflation generally around the world is obviously moderating, but not moderating enough in the United States. Energy prices remain a little bit sticky, and particularly crude global oil prices. Gold's neutral here. Economic data, China, a big data release today, usual data dump. Retail sales were 3.7%. That was a big improvement. That's kind of a little bit lower than pre-COVID. So what I've been saying, I was saying this during COVID, you've got to see China as resetting in a long-term historical sense to more moderate growth rates, but those that are still impressive by Western standards, and therefore you don't worry about this lower trajectory of the Chinese economy. This is the new normal. And I said that the COVID experience would disguise that process, which was already beginning to happen pre-COVID. And we're seeing it in the data now with retail sales. We've had plenty of time for the economy to recover. We know there are soft spots in the economy in China, but retail sales, it's a pretty good number, 3.7% jumping from 2.6. It suggests stability in the Chinese economy. We also saw industrial production come in at 5.6%. Very healthy number, very strong number, but not as strong as pre-COVID. Refer to my previous point. New home prices in China were really interesting. They were down 3.9% year on year. And that's kind of not surprising because there's a pipeline of building new properties, new homes, and obviously buyers are a lot more careful about jumping into these properties at the moment, seeing an oversupply situation and things that have happened with Evergrande, etc. So it's kind of not surprising that new home prices are falling to that degree, but still, obviously, it's a soft spot and a worry. Unemployment, interesting number, 5%. It was 5% last month as well. That is actually around or better than pre-COVID levels. So I wouldn't be panicking about that unemployment number at all, because again, as I said, it's a more mature economy now, and that's kind of its new normal. I think it's not a good number, and the PBOC will want to support employment, and the government will want to support employment. So we expect strong infrastructure spending to continue, but there's still going to be that soft spot in the housing, apartments, construction area, and that's what we're seeing. Other data today, Japan machinery orders. I've been warning people not to expect the Bank of Japan to be hiking too aggressively because industrial production's been soft there and the economy isn't really gaining traction the way it should. So Japan machinery orders today were down 2.9%, but they were up 2.9% the previous month. So that's flat over the last 2 months. But again, not a data environment for the Bank of Japan to go, everything's okay, let's raise rates even at all anywhere near aggressively. So it's kind of an unwinding of stimulus that's a little bit happening still in the bond supply, etc., in Japan. But I don't see many BOJ rate hikes at all over the next 12 to 18 months. One or two here and there, tiny little ones. That's about it. New Zealand services were interesting. I've been warning about the New Zealand economy for quite some time. New Zealand services are really tanking. They fell 3.6 points to 43, but this means services are really rolling over savagely to the downside and in deep contraction. The New Zealand economy is very troubled indeed. And again, like the RBA, they don't have the world's smartest central banks. I don't know what it is about Australia and New Zealand. We just don't, I don't know, we seem to promote bureaucrats to decide monetary policy, and they're the least skilled and capable people to have that role. Anyway, in Australia, we saw job ads down 2.1%. They're going to remain soft. Yeah, it was like the fourth straight month of decline in job ads. I've been saying recession for Australia. We're probably already in one. This data, it's anecdotal, but it kind of supports that. Overall, in all of this mix of data, I think the real standouts to me are that US consumer confidence data says US economy is in a lot of trouble and is tanking. The other thing I'm keeping a real eye on is the euro, being short euro. The euro, how can the euro be strong as so many European leaders edge towards conflict and war, direct war in Europe? And the thing that worries me is we just had the G7, which was interesting. 6 of the G7 leaders are probably not going to get re-elected as things stand. So this is a group of desperate people. I mean, Biden may not even be in the race because his own party may be, because there are rumblings, his own party may remove him as their candidate in the not too distant future, or they will let him run because they don't really have a strong candidate to replace him with. My solution is, get Robert Kennedy back as the Democrats' candidate, and they'd probably win the election, but I don't see them doing that. So the two things I'm worried about, US economy is tanking. We know the Australian economy is tanking. That's not going to change. Still sell Australian dollars, still underperforming Australian stocks is my outlook. The euro is a worry because these leaders are desperate people. They invited Zelensky to the G7 and promised another 50 billion euro, I think it was, or dollars. And they're very aggressive at the moment. There's a lot of aggressive stuff happening. I mean, Russia's in the wrong, but at the same time, do we have to have a full-scale European war? I know that in Europe at the moment, a lot of people are feeling like there's an inescapable drift now towards conflict. The reason I'm going over this negativity is that I find it difficult to see how the euro could remain strong if there is an expansion of the conflict in any form. Just NATO and Russian troops being in direct conflict. Russia's already saying that NATO forces have fired the Shadow missiles, etc., Storm Shadow missiles and others. So there's a real build-up here going on. All right, I'm not going to go into that anymore. I'll be doing my trading video for members. If you'd like to see what that's about, please do sign up on my website, cliffordbennett.com.au. And, if you're really enjoying your trading, don't forget propx24.com. Well worth a look. I don't recommend very many brokers, but I do recommend propx24.com. And that's it for me. I'll get a trading video out to those on the mailing list and members very shortly. Thanks very much for listening in. Have a great day.